All right, guys, so let us make progress. Let us make progress. The network frustrated or tried frustrating our efforts earlier. So we are talking about market structure here, and I was talking about the fact that the market has its characteristics. I was talking about the fact that when the market wants to move either to the upside or to the downside, the market does not move in a straight line. And I was trying to give us the characteristics of an uptrending market. So let us make progress. Like you have read inside Baby Pips, what are the things that characterizes an uptrending market? They are called series of higher highs and higher lows. And I was trying to explain what it meant. And I was trying to give us an example that let us assume and imagine that this is a new chart, a new asset. Take the Bitcoin, for example. Bitcoin was giving birth to in 2013, if I'm correct. Yes. So meaning that a new coin can also come out this year and the coin will also make wave. So what we are saying is that it is now that Bitcoin charts can make sense. But on the first day it came out, you can either see something like this or something like this. And the fact is that seeing either of these is not enough information to give us any clue as to what kind of trend Bitcoin has at the moment. It is now that you can say that Bitcoin has an uptrend, but when it first came out, you never could tell. That's number one. Number two, please excuse me. Number two is that there are some coins too that since they've been created, they've never made any single profit for those who bought them. And those coins are still in existence. And I'm not joking. So what I'm trying to say is that a market is like this. In fact, let me use this tool. Excuse me. All right. Can you see this one is even giving the view of a real candlestick, right? So let's take this one off. So what I'm saying is that you see a market that is like this. Trust me. Let's see with this. With this information alone, the fact that it is headed to it looks like the direction is to the upside does not mean that we can conclude that this is an uptrending market, which is why we say an uptrend or a downtrend has its characteristics. So what we want to see before we can then confirm that, okay, this market or this new asset or this current chart is in an uptrend is that you then see something like this. The market will then come down and then go up. So in this instance now, we can safely conclude that, oh, looking at what this chart has now done, this is an uptrend. Why? Because the market gave us a low here. The market gave us a high. The market then gave us another low. And then the market gave us another high, of which when you now still look at everything overall, you realize that the market is heading towards which direction? Towards the upside. Now, why are they called higher highs and then higher lows? In this instance, this one alone will be labeled a low. Are we together? Because in respect to the direction that price has gone, or even in respect to any position in life, this place is lower than this place. And then we'll call this place a what? A high. Follow me. Now you see this region, It is now called what? It is called a higher low. Why is it called a higher low? It is called a higher low because the market came down. At this point, this place is also low, but it is a low that is higher than where the former low is. Do you get it? This is a low. But when we compare it to the last low that the market created, this is a low that is in a higher position than this one. That is why it is called a higher low. So we then label that point as what? As higher low. Are we together? Then you come to this point. This point is called a what? Higher high. You should know the reason already by now. And why is it called a higher high? It is called a higher high also because compared to the last high that the market created, this high is higher than the previous high. It's as simple as that. So an uptrend market is a kind of market that is always moving to the upside, creating series of lows that are higher than the previous ones, and then highs that are higher than the previous one. And when you look at it reasonably, this is the only thing the market can display to move to the upside. So how to know that a market is in an uptrend is that at the end of the day, it will keep creating higher lows and higher highs, and it will be moving what? It will be moving to the upside. So let's label this place higher low. And then we also labeled M. Oh, imagine, oh, that was a mistake. Higher high. That was a mistake, please. So this becomes the new higher high. Let me change the position of that to the left. So that becomes our new higher high. Excuse me, guys. That becomes our new higher high. Of course, this is the new higher low. You get it. And then this also becomes the what? This low over here becomes the new higher low. You get it. And then this high also then becomes the what? The new higher high. So that is what characterizes an uptrend. And then reverse is the case for a downtrend. So let's clear all of this so we can make it make sense. Of course, we still go inside the chart for chart example, but let us go through it so that it can make all the sense. And then for a consolidation market, what will you see? I said a consolidation. For a downtrending market, of course, a downtrending market is a market whereby equals to the market, a situation whereby the market is moving to the downside over time, over a period of time, over time, still the same thing. You get. And then for downtrend, like you saw on baby pips, what will you see? You see series of lower lows and lower highs. So let us give it a defining meaning, just as we did for uptrend. So imagine that for a scenario also, we saw an empty move like this. Guys, the fact that the market's headed down, but it's just this one single move, is not enough to judge that it's a downtrend. The markets could be, for higher high, I showed us something like this, right? Meaning that the markets went up, came down for a moment before going back up. What if this arrow that come down that you see is this kind of a move for an uptrend, whereas the market will still do this and then move back up? So meaning that one leg movement is not enough to confirm that this thing is going in a particular direction or a trend. So we want to see the markets come down, go up rather, and then come down to close below the previous low. And in the case of an uptrend, to close where above the previous high. I hope that makes sense. That the markets will go, come down, go back up to now go and close or create another market movement above that previous high. So let's come back to our downtrend example. So in this case, the market creates a high because when you compare this place, when you compare this position to this position, this is a high. Is it making sense? And then this is what? A low. Then the market comes back up. Now, this is a new high because when you compare it, this place is higher than whatever is down here. But this high is lower in position than the high that is here. That is why it is called a lower high. It is a high, but is low than the previous high. And then the market then comes to create another low that is what? That is lower in position to the previous low. Does it make sense? It's just simple grammar. And now you can see the representation on the charts. So what that implies to us is that a bearish market is now also a market that does what? Creates a series of lower lows and what? Lower highs. So when you see a market that is moving in a direction that you can tell that the market is doing what? Creating what looks like lower low and then lower highs, you can safely conclude that, oh, this is a downtrending market. So let us label this as we did for uptrend, just to have context. So this is lower high. Let's extend this a bit. And then this is what? Lower low. Does that make sense? So we can just go ahead to do what? Just copy and paste them. So we So does that make sense? So a downtrend creates series of what? Lower lows and then lower highs. Uptrend creates series of higher highs and then higher lows. However, for a consolidation market, what is happening? The market is just bouncing between two regions. So in that case, you really can't tell whether, no, you can't just give any labeling to the market. And which is why I'm sure you must have seen it on baby pips that when the market is in a consolidation phase or in a choppy phase, what should you do? You should stay out of the market. And that's the best advice. Because as traders, remember I said we make profits when we analyze that an asset will go up and we buy, or we analyze that an asset will go down and we sell. Does that make sense? That is how you make profits. And trading has started already. This is how we make analysis. That in an uptrending market, when the market goes up, comes down, goes to create another high, and let's say you met a market in this position. So as a trader, since you've known that, okay, this is an uptrend, what does the market do in an uptrend? The market creates series of higher highs and higher lows, right? What we teach you, what I will teach you, what most people will then teach you to do now is that you wait for the market to do what? To come back and create this higher low. And when it comes to create this higher low, you can join it in going back to then create the higher high. Is it making sense? I believe it is. That is how we make technical analysis. And that when the market is selling, let me take this off a bit. You know, the market has given you a low, a higher low, a lower high rather, lower low. You wait for the market to come and create another lower high so you can join the market in going back down. So that is why mostly when you see the chart that we make for analysis, you realize that price is yet to get to where our price is. And then what do? We then have our setup over there that, oh, this is where we are expecting that the market should get to, and then do what? Reverse towards the direction where the market is coming from before. Is it making sense, guys? I believe it is. So that is how we trade. This is like what I just shown you now. This is the crux of Forex trading. That when the market is going up, you want to follow it up. And when it is going down, you want to follow it down. That is how you make money. When you enter for a buy and the market starts going down, that's a loss. That's how you lose money. And when you enter for a sell and the market is going up, that's a loss. That's how you lose money. So it is important to understand this nature and character because this is how we trade. That when a market is in an uptrending position, you want to follow it and just be going up. And then when it is in a downtrending position, you want to follow it and just be doing what? And just be going down. So let me show you an example that I have on this same GBP USD. I believe we have an understanding of this already. We've seen a lot of it on baby pips, and this is me just giving typical explanations to them. I'm saying so because I want to wipe them out, and then let us go into chart examples to have understanding. See how we label things on the chart and then make them make sense. So this is GBP USD. When you look at it now, what has the market been creating over a period of time? We said the market is in a downtrend, isn't it? The market is in a what? Is in a downtrend. And what can we truly observe that the market has been doing? Of course, we can say that from year to year, the market was in an uptrend. But from year to year, the market was in a downtrend. We'll still talk about market reversals. But before we get there, let us have more examples so that this thing can sink in properly. What can you observe over here now? Let us begin to label. This is a high. This is a high here, isn't it? And then this is what? A low here, isn't it? What then did the market do? Can you see that the market came back, created an high, but did not get to this point? Then we can label that place a what? A lower high, isn't it? That's a lower high because it didn't get to that previous point. And what did the market do? It went all the way down to create a what? A low that is lower than the previous low, the first low here. This is a lower low. Although the market cannot always and will not always be picture perfect, but is it making sense? Yes, it is. In conjunction with what you saw on baby pips and other things that you may most likely see online. So what did the markets do again? The markets came back, created another high that is lower than the previous high. What then did the market do? Markets came again to create what? Another lower low. Went up to do what? Create a new lower high. Came down to do what? Create a new lower low. And you know, we can keep going until we get to the end here. But there's an example I said I wanted to show you, which is what? We can see that the market came back up here to create a new what? A new high, isn't it? It has gone to create a new what? A new low. Since this is a downtrending market, what should we be expecting, guys? It's simple that the market should come back, create a new lower high, and then do what? Go and create a new lower low. That is, as this is market analysis. This is how we analyze the markets to now join an asset to either go up or go down. And I want to show you something, an analysis I did while I was on my own. All right. So I don't think the market may come this up, but I'm still expecting it to come up here also, as you can see over here. To do what? To create a new lower high, because this place looks like a minor structure here. Create a new lower high, and then do what? Continue to move back to the downside. Because this symbol means that I'm expecting a sell position. Does it make sense to you guys? That is what we do in trading. That we understand that in a selling market, all the markets will do is create lower highs, lower lows, lower highs, lower lows. So when the market has come to create a new lower low, and I know the nature of the market as we've been seeing all the way from here, because take for example too, okay, this is not a paid trading view. I could have said, let us take off all these parts like this. Let's take off all these parts. Let's assume that the parts inside the box had not happened. Let me see if I can make that. Okay, beautiful. So let's assume that all of that part had never happened. All we had is just this part. Just as I'm postulating now, what we'll be expecting is that the market should come and create a what? A lower high. And then I look for what? Opportunity to join the market to where? To the downside. So this same move that I covered that came down, I shared an analysis on the group some days ago of, oh, I shouldn't have cleared that. Sorry. Let's just take only this one off. Okay, delete. Good. I shared an analysis of the market some days ago when the market was exactly somewhere around here. That is because I waited for it. Let me see if I can. Oops, I intentionally shut down my WhatsApp on this laptop so that call will not interrupt. I could have said I should get, well, let me see if I can get it. Let me see if I can get it. Just hold on, guys. Oh, I don't think I can get it, guys. But the analysis on that day was when the market was exactly somewhere around here. Since it has come and it has come down now, it has given me a kind of confirmation. So I was expecting the market to retrace a bit and then come down. That is it. That is what we do in the Forex markets. And in a situation whereby the market is heading to the upside, let's look for an asset that, has been most likely going up for a period of time. Awesome. This is beautiful. Let's ignore all this part and let's focus on this part. What can you also observe over here? You can see that the market gave us a low, right? Let's label that. The market gave us a low. Then went out to give us a what? A high. The market came to create another low, although it didn't come so deep, but it is part of it. And then the market went to give us another what? Another high. I hope you are following. The market came, gave us another low. That is called a higher low. It is a low, but it is higher than the previous low. This is also a low, but it is higher than the previous low. And then the market went out to give us what? A new higher high. And then the market went out to give us a new what? Not there. The market gave us a new higher low. And then what happened again? Still went out to give us what? A new higher high. We can just keep going on and on. But when we now put this tool on it, for example, this tool, come on, I'll start from here, go here, come here, go here, come here, go here, come here. I even missed that. Go here, come here, and then go here. What then can we say? We would almost say that how is it different from what we can see on baby pips or in other places? So that's the nature of the market. That is why it is called market structure. That is why it is called the characteristics of the market. And that is why this is one thing you need to understand so you can be able to easily predict the direction of the market. That, oh, once I see a market creating what series of higher highs and higher lows, I know that this is an uptrend. If the market has gone to create a new higher high, all I want to do is to wait for the market to then come down, create the higher low, and then join it to move up. So I don't want to be in a hurry. I always want to follow the trend. I want to wait for the market to then come down, because let's imagine that I opened a fresh chart. In fact, let us look at what's awesome. Awesome. So look at USD JPY at the moment. USD JPY created what? It created an high here, right? Give us a low, right? Give us a lower high. Now the market has done what? It has given us a lower low. We are doing market analysis already. As a trader, since I've taught you the nature of the market, what should you be waiting for? Number one, we have to confirm the trend. The trend is a downtrend. Number two, so what am I waiting for? I want to wait for the market to do its thing, which is what? To come back to create a new lower high, just like he did here, and then join the market to go and create a new what? Lower low. That's it. That's it. Even in the strategy I will teach you, the first thing you need to know how to confirm is the trend, the market structure. And this is just it. Like I just taught you already. Of course, the market was moving to the upside before, but now the market has changed direction. There's what we call market reversal. And that's the next topic we want to look at. But before we can even talk about market reversal, you need to understand market structure. So to wrap it up, guys, an uptrending market is a market that is moving by creating series of higher highs and higher lows. And a downtrending market is a market that is creating series of lower lows and lower high. While a consolidation market is a market that is bouncing off a region. So now let's talk about consolidation markets as we wrap up. A consolidation market is a market that is doing what? Bouncing off a region. And why should you stay out of a consolidation market? You should stay out of a consolidation market because in such situation, you don't know where the market is actually heading to. So take a look at this place, for example. Let me look at a very good spot where the market was really, really consolidating. Of course, there are different kinds of consolidation markets. There's the dynamic and then there's the static, but don't let me bore us with that yet. With time, as you grow, aha, this is an example of a consolidation market over here. What will you observe? That's an high. What is going on here? I thought I reduced this to 12C. 300K. Yeah. Let's give it color green. That's a high. And then this is the low. So what can you observe about that region? You realize that when the market went up, it got to this place. Let me zoom that in. I'm sure you saw this on baby pips. So the market went up, came down. Of course, it was going up in the first place. And it looked as though it was trying to create what for us? a higher low and then a higher high. But all of a sudden, we realized that the moment market got here, it bounced down, got here again, still bounced down, got to this place, bounced back up, got to this place, bounced back down. Once we begin to see things like this, we can now conclude that the market is in a consolidation phase. The fact is that before the market starts consolidating, you can't know that we are about to enter a consolidation market. It is from you observing what the market is now doing. That is when you can now say that, from the look of things, okay, now seems like the market is consolidating. And what do you want to do in such situations? Trust me, you want to stay out. Stay out and be doing what? Stay out and be looking until the market then breaks out like it did in this place. I'm sure that you saw this on Baby Pips. This is when you can now conclude that, okay, now we've broken to the downside. What do we want to do? We want to wait for a retracement and then join the market to do what? To come down again. That is trading, guys. This is trading in a nutshell. So this is how to identify a consolidation market. When you see that market bounces off a region to the top twice, bounces off a region to the bottom twice, the market has entered the consolidation phase. That is how to identify a consolidation market. Let us look at another one here. Can you see this region here? And then this region here. This is actually a consolidation market. The one inside this place. Let me make this box tinier. Let's just bring this. So markets got into that place. From here, it came down, went up, came down, went up, came down, still went up. So in this kind of situation, what do you want to conclude? That this is a consolidation market. What do you want to wait for? You want to wait for a breakout again. It is only coincidental that the two breakouts that we've seen came to the downside. Breakout is not always to the downside. It could be to the upside. It could be to the downside. But Coco is wait for the market to break out. And then what do? You join it to move in the direction. So as you wait for it to break out, we can confirm that that's a what? That's a downtrend. What do we wait for again? Like in the previous example, wait for it to come back and follow it down. Shikena. That's how simple it is, guys. That's how simple market structure is. So I've easily taught us uptrend, downtrend, and consolidation markets. So you can keep going on and on inside the chart to keep looking for examples. Like over here now, you can see that the markets came up, came down, came up, came down, went up, came down, went up, came down. It's meant to do what again? Go up. That's what the market did. Can you see? Over the long run, although it took time, this is another form of consolidation markets. Sometimes markets can consolidate within a space for a very large period. But overall, what did you observe that the markets did? The market still went back up. So what I want us to learn from these guys is that the market has a character. And what we want to learn as a trader is how it moves in that character. And having learned that, we can easily get to predict the market. So this is GBP, JPY. It's just for the sake of the fact that there are people that will now be trading this in the future. We could say that whatever happens in the future, today's date is what? Today's date is January 9. So let's see what happens to GBP, JPY in the nearest 5 days. All things being equal, the market should do something like this. It may come this deep or stop somewhere nearer and then go down. That's not what I wanted to drop. Come here and then continue to move to the downside. Why? Because that's the nature of the market. Because that is what the market does when we are in a downtrend. And just like we saw in the case of an uptrend, before we got to this place, right? we can see that we had what over here? We had a low, we had a high, higher low, higher high, higher low, higher high, higher low, higher high. That is how it is, guys. But now there's what we call change in trend direction. That is what I'm teaching you next. Because when you look at this and you almost say, is it not moving to the upside? Now, why are we now selling? That's because there's what we call a change in trend. Some people call it change of character. Some people call it break of structure. That is how we observe the movement of the market. We follow it, and then with that movement, we make trading decisions. So that will be all for this session, guys. I do hope you understand the simplicity of market structure. Let me take it one more time again, that an uptrending market is a market that creates what? Series of higher highs and higher lows. A downtrending market is a market that creates series of what? Lower highs and lower lows. And then a consolidation market is a market that what? The way we observe it is that when we see that the market has bounced off a region to the upside twice and also bounced off that region to the downside twice, then we can safely conclude that, oops, this is a consolidation market, because this is the first time, this is the first time too. Now, market has come here, bounced up, come here also, bounced down. Are there ways you can trade consolidation markets? Some people will say yes. I'm sure maybe even baby peeps said yes. But guys, you are a beginner. So for now, all you want to do is to do what? Focus. Focus on what? Focus on how to follow the trend. And with time, as you become masters, you get to learn other things. So that will be all for this session, guys. You've learned market structure. Watch this video again and again. Read about it until you settle. There's an assignment after this class, but that's after we take the next one, which has to do with trend reversal. And then we can move further as we progress. So that'll be all for this session, guys. Cheers and see you at the other side.